The market pulls back to support, then bounces as expected. Is it a bear trap? This is Invest with Jacob. Okay guys, so in yesterday's video we talked about our primary path being a wave 2 pullback into support and then the bulls bouncing it from there. And that's exactly what we saw. The market pulled down into our support area, then the bulls bounced it in a 5-wave structure. Now we look for the bulls to follow through. I'll get into that in just one second, but first, if you're new here, welcome to the show guys. My name is Jacob Gabbard and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so yesterday in the rooms, we killed it. You can see here PT's room, we had traders with 5-figure days. He was all over it. In my room, we sold our puts at just about the exact low and added longs at that time and did very well. Not only are we a trading environment, we are a training environment. We are a community and a family, and we all help each other. If this is something you're interested in, stay tuned for later in the video. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And we talked about yesterday topping out here in this 5th wave and looking for a pullback into support. And our support area was down here around 41.11 to 41.27. We said they could go as low as 40.98. They went just a little lower than our 41.11, spiked it, and then came back up, which is what you would expect to see here. So this market moved quickly. Very strong sell-off here early in the day. We sold our puts right here at the end of this hour bar. We added longs there as well and did pretty well on the move up so far. And so now we have a 5-wave structure up. It's a little tough to see on the hourly chart, but there are 5 waves. So now we would expect a wave 2 here, a 3, 4, and 5 up toward the 41.75 to 41.90 area for wave 1 of 3 of this wave 5 we're talking about here. And the reason we're looking for those 2 areas is the 0.5 and 0.618 extensions of wave 1 and 2 are very typical retrace targets. They almost always come back to the resistance zone, which is what we see here. 618 comes right across the top of that resistance, and the 0.5 is right across the bottom of that resistance. So you typically look for them to move back into resistance, okay, and then fail one more time in wave 2 of 3 in an ABC form, and then you look them to come back up into that resistance, grind for a second. By second, I mean longer, and then break through. And this is why Elliott Wave works. When people tell you it doesn't work, this is market dynamics and why and how Elliott Wave works. So this is something that people don't talk about. They just talk about waves. In my training series, I talk about all of this stuff and the actual science and technical analysis behind the amazing things Elliott discovered. And what you look at here is a wave 1 almost always comes back into resistance, which you see here. The 4200 area has been our resistance. And then you see a pretty strong sell-off in wave 2 because there's a rejection there because it is strong resistance. And then what happens is each time you hit resistance, it gets weaker. So they hit the resistance, they sell off. They come back up in wave 1 of 3. They hit that resistance again. They sell off. A little weaker this time because they've weakened the resistance. They'll weaken it again. Then they come back in wave 3 of 3. They get to that resistance. Okay, and then they grind because it's weaker now. They can't fend off the bears in an up move or the bull. They can't fend off the bulls in an up move or the bears in a down move, and they end up chopping up here until they can break through. And once they do, you get a squeeze effect because all of this resistance turns into people covering, and that covering fuels the move up, and then they get long, which fuels the move up even more. Which is why wave 3s are what they are, and why people are so dumbfounded by them because they don't understand how we can go up or down so fast for so long. And so this is why Elliott Wave works. It's not just made up numbers. It's not just some crazy wave pattern. You have to understand the science and the technical analysis behind it to understand why it works. So that's just a little quick Elliott Wave lesson while we're doing this, since we're trying to get a wave 3 breakout. And this is all gone over in depth in my training series in our training room. So as I said, we would expect a continued 5-wave move up to the 41.75 to 90 area, ABC down in 2 of 3. Then we'd expect 3 of 3 to come back up, grind, and break through. Now, since it's Fed day, things happen a little differently. This could be a quick spike down. When you get catalysts that are real strong, sometimes you don't get that full ABC look. You just get a move down and a move up that absolutely blows through here because you have so much volume. So when you have major catalysts, you may not get this exact chop. You know, Elliott Wave is a little bit of an art form as well. So you may get a spike down and then a sharp move higher from there if that's the path they're going to take, and that is the primary path. Now, our secondary path would be that this move up was overall a wave 2 of 3, And overall, we'd be starting wave 3 of 3 lower, but that would need to hold under 41.47 and make another low to give us 5 down in an impulsive way. So right now, all you have is this 1, 2, 3. The bounce could be considered 4 as long as it stays under 41.47 on the futures, and then you could get a 5 down from there, and then you would get a bounce and then another strong move down after that. So it is possible we can go down, but they need to hold it under 41.47. Okay, otherwise this looks more like a corrective move to the downside and not the bigger sell-off that we've been talking about in Wave C. Over on the NASDAQ, okay, on the NASDAQ we had a similar type setup. I told you that we were well under our direct breakout level. And by the way, both of those counts have invalidated now. But we were well under our direct breakout level on the NASDAQ. And so I said that it was much more likely we would get that wave 2 pullback, which is what we got, because the NASDAQ would just have to extend too far to catch up, and I just didn't see that happening. So overall, we got our wave 1 up, our wave 2 down. We got our bounce so far. Again, we'd look for this to be a 1, 2, 3, 4, 5 to get our wave 1 of 3 up toward the 13,341 to 13,404 area. And then if they can break, and then we should expect a pullback in wave 2 of 3, and then a move higher that breaks out over 13,481 to give us a strong indication that we are in that wave 3 higher on our way toward the 13,730 area as our next target. So NASDAQ has a very similar bullish setup in that way. As long as they can stay above this wave 2, they have they are positioned to push it higher. However, if they are unable to break out, okay, over this B wave high and up and get us this wave 1 and 2 setup, we would look at this as a potential start to a 5 wave down move, where you had 1, 2, 3, and this little bounce is 4, but we need another low for 5, and then we need a bounce and then down from there. So it is possible we can go down. That would be the setup we would need. They would need to push down below yesterday's low. That would give them 5 down, and then look for a bounce at that time. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. We also started our training that I talked about in the video today, and all of the stuff that I talked about is covered in depth in here, and all of my Elliott Wave training is covered in here, so that you can learn Elliott Wave the way I teach it and the way I use it, so that you can understand these patterns and breakouts as well. This is included in both rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months. So we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as day trading, individual stocks, and PT's reduced risk binary method that just crushes the market. He gets you in at a small price and gets you huge multiples on your money, and it's how he structures the trade that's so unique. It's something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. We also started a challenge account where you put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. ES and NASDAQ both have a bullish structure. We would look for them to build a wave 1 up toward 41.75 to 90, then get a wave 2 of 3, and then break out from there. It is Fed day. This can all happen very fast during the Fed meeting. We could see a spike up, a spike down, and then a spike back up. There are lots of different ways this can play out. Just remember the Fed is a strong catalyst. If they can hold it under 41.47 and give us another leg down, that would be a 5th wave, which would potentially lead us to a bigger move down. But I would have to see that first before we got into that. Over on the NASDAQ, same type of deal. We got a bullish setup. We would look for them to get a 1-2 setup. So the wave 1 would be 13,341 to 13,404 area. Then we'd look for a pullback from there and then a breakout after that. If they can't do that, we would look for a direct move down and to give us a 5th wave down, and then a bounce, and then down from there. Guys, that is the market update for today. I will talk to you tomorrow.